Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to accounts receivable and average collection period. Get ready, it's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. Notice we have a few tabs on down below. You may have even more if you're working along with your practice problem because you're going to have the answer key with it, and then you'll have these different tabs. Now, some of them will be similar problems. Some of them will be slightly different, but they're fairly small problems, so we're going to work through these fairly quickly. I'm going to go back to the practice problem 1, and we are going to be calculating the average collection period. The data that is given for us to calculate the average collection period is the credit sales and the accounts receivable. Now remember that when you're thinking about the sales, you got to be thinking about the credit sales when you're kind of thinking about the accounts receivable balance. So we want to pick up the average collection period in days. That's going to be our bottom line number, where the basic formula is going to be the accounts receivable divided by the average daily credit sales. So that's going to be the formula that we will be using. Let's calculate it in terms of an up and down type of format. I think it's useful to continually put this stuff into basically worksheets like this, kind of like you're making a worksheet like a tax return type of calculation worksheet. It's easier to visualize a lot of times and easier to break down particular parts of the formula. So we're going to be picking up then the accounts receivable. So that's going to be our top line item. I'm going to put that on the outside because we're going to have to do some kind of like sub calculation for the average daily credit sales. So the accounts receivables out on the right that we're going to have the 230. Then we're going to calculate the average daily credit sales. I'm going to put a colon on that because I'm going to pull that into the inner column. It's going to be a sub calculation to get to the denominator of our calculation. So we're going to have the credit sales that we're going to be picking up here. So we'll pick up then the credit sales, and that will be the 1,600,000. And then we're going to divide that by the days in the year. The days in a year, which more closely would typically be around 365. But a lot of times we want to make things even. So you might see it with 365. You might see it with 360 sometimes. Why would 360 be used? Because that breaks down the months into even 12 months of 30 even days. So 12 months times 30 even days to give you an even 360. That's going to be the average daily credit sales. Now again, when would people use 360 and when would they use 365? Why isn't it just standardized? Why doesn't everybody just do the same thing? Because, you know, it's going to differ based on what your needs are. It's not like generally accepted accounting principles. There's going to be these differences that we just gonna have to deal with and think about when those differences might be useful to give us the information that we want to have. So there'll be more standardization, but it's not a fixed thing like if we had a law or principles that would be going off directly on. So we're going to say this is the 1,000,006 divided by the 360. Let's put an underline under the 360, home tab, font group, and underline. So credit sales divided by the days in the year, that's going to give us our average daily credit sales. Now we've got the numerator and denominator in the outer column, the accounts receivable divided by the average daily credit sales. That will then give us the days, the average collection period. Average collection period, or in other words, the days the accounts receivable are outstanding on average. So we're going to say the 230,000 divided by the 444. Let's add a few decimals here. We're going to go to the home tab, numbers, and let's add a couple decimals. So we're going to be at the 51.75 days. Now this is useful. We want to know this when we're thinking about our budgeting and our cash flow management, because this is obviously going to be necessary when we think about what the cash flow will be. Let's put an underline here. We're going to go to the home tab, font group, underline it. Let's do it another time. Let's just get used to this calculation. So we'll do it again. So we have similar information up top, just slightly different in that we have the sales, and then we're going to have the percent that's going to be the credit sales. We got the average collection period, and that's going to be calculated as the accounts receivable divided by the average daily credit sales. So we'll start off with the accounts receivable, same formula we'll have up top. I'm going to put this on the right. So we're going to say the accounts receivable on the right is going to be that 810,000. Then we're going to pick up the average daily credit sales. We're going to have to do a little calculation to pick this up. So I'm going to put average daily credit sales colon, and then I'm going to pick up the total sales times, let's do the calculation right here. Now you could have another sub calculation here to calculate, obviously, the credit sales, because we're giving total sales and then the amount that will be credit sales. I'll just combine them together because it's a pretty quick calculation. But note, when you're doing a problem like this or putting your information into steps, then you might have another subcategory down here and say, well, now I'm going to calculate the credit sales to be a subcategory of the average daily credit sales. In any case, we're going to be picking this up and adding them together. So I'm going to call this the credit sales, which is going to be the total sales divided by the portion that we believe are going to be on credit, on account, meaning we gave an invoice and didn't get paid at the point of the time the work was done, but expect to receive payment in the future. So we take the total sales times the 92%. That's going to give us our credit sales. Then we have the days in year. And once again, we're going to use the 360, which is 12 times 30 to make it even. So that's why you might use 360 as opposed to 365, which is a bit closer to the norm most of the time, or what's the actual number most of the time. That's going to give us the average daily credit sales. I'm going to put that on the right-hand side. It's going to be equal to the credit sales divided by the number of days. That gives us the average daily credit sales. That's going to then allow us to calculate the average collection period, which we'll put on the outside. This will be equal to the 810,000 divided by the 1333. Let's add a few decimals. We're going to go to the Home tab and the Numbers group and add a couple decimals there. So 62.15, let's put an underline here, Home tab, Font group, and underline. So again, that's going to be useful when we start to think about our cash flow and managing our cash flow. Let's go to the third one, slightly different formations relating to our accounts receivable types of calculations. We're going to be calculating the average accounts receivable now, and we're going to kind of back into what we did before, because what we did here, notice what we did here, we had the average collection period given the sales information. Now we're going to say, well, let's look at the relationship and calculate what the average accounts receivable would be based on these sales numbers. Now, remember, this doesn't take into consideration like the accounts receivable beginning balance. We're going to say if the sales from this point of time that we're talking about, what would the accounts receivable then be basically on average? So we're going to say then, we're going to kind of reverse the calculation we did before. So remember, the average collection period, we can think of as the formula as the average collection period equaling the average accounts receivable divided by the average daily credit sales, right? And if we broke that out into our more detailed calculation, it was with our subcategory, it was accounts receivable, and that would be over here we had on the right, and then we had the average daily credit sales, which included a subcalculation, which was the credit sales, and the days in year to give us the average daily credit sales. And then we had the average collection period. The average collection period. So this was our calculation before. If I go to the Home tab, Font group or alignment, increase the indenting. Now the reason I point this out is because you might memorize kind of the average collection period formula, the accounts receivable divided by the average daily credit sales, and then having to break out the average daily credit sales into the calculation of the credit sales divided by the days in a year. And then you can just simply plug in for the unknown. In other words, it's less likely that you will be memorizing. You may not need to memorize the formula to calculate the average accounts receivable, but rather know that it's related to and part of the average collection period, which you're given here, and then plug in your information for the average collection period and look for the unknown. So what we don't have is the accounts receivable here. That's what we're looking for. I'll make that yellow. So I'll make that yellow. The credit sales we're given are the 630, and the days in the year are going to be equal to the 12 times 30 days. So if we divide that out, we got the 630 divided by the 360. And then we know that the end number, the result, is going to be 40. And then you can underline here, Home tab, Font group, and underline. And then we're back into the numerator up top, right? Which means it'd be easier just to plug it into this formula here, but same thing. Okay, so then let's do that. If we were to do that calculation in like a vertical calculation, reversing this, doing the algebra, and then putting it into like a table type of format like this, we're going to say, all right, then we got the credit sales. It's going to be the credit sales is going to be the 630,000. And then we have the days in year, which are 360, which is going to be 12 times 30. Going to put an underline here, home tab font group and underline, and that's going to give us the average daily sales. I'll put this on the outside here. Not sure exactly why, but we'll say 360 divided by the 630 divided by the 360. There's our average sales, and then we're going to be picking up the average collection period, which is that 40 days. And that'll give us the average accounts receivable. If we then multiply this out, the 1750 times the 40. Let's put an underline up top, home tab font group and underline. And so you can see that that's the same thing you would be doing here, right? If I was to back into this number, it would be this number times this number. And then if I wanted to prove my calculation, that's where the 40 comes from. And if we wanted to prove the calculation, we can do the division again. We could say it would be then this divided by that number, and there's our 40. Home tab font group here, and I'm gonna make a little, I'll put this as part of our worksheet, which will be included for you. So then there we have that. So again, you might memorize just this, and then when you're thinking about, you know, using that number to kind of back into your accounts receivable, then you can do so. So if you could say, hey, this is my average collection period, it might be useful then to think about, okay, based on that average collection period, how can I, back into what my accounts receivable would be if I had the credit sales of the 630 and the average collection period of the 40. What would my average accounts receivable be? It could be useful to back into that number, and you might be able to do so or think about that by taking this formula or memorizing this formula. You may not need to memorize, in other words, this formula to do so, but simply plug in the unknown here. All right. So now let's do that again. Let's do another one like that. So once again, we've got the credit sales. We got the average collection period. So you might memorize the average collection period formula to back into what we're looking for, which is the average accounts receivable. So the formula average collection period equals the accounts receivable divided by the average daily credit sales, and then the average daily credit sales is the credit sales divided by the days in a year. So if we plug that into our formula once again, let's do this one down here because we've been working with that one. And this is the one you might more commonly memorize because this is the information that you would typically have on the financial statements, and then you would be looking for this number. But when you're doing projections into the future, you might project this number and then try to back into what the average receivables would be based on that and the sales. So you can see that would be a useful thing to do. So the accounts receivable is the unknown. That would be on the outer column. We don't know that. And then we'd say, okay, and then we calculate the average daily credit sales, which would be the credit sales. So we'd be picking up this item up top, and then that would be the 1,000,004. And then we have the days in the year, which is going to be equal to 12 times 30, 360. Underline here, home tab font group and underline, and that's going to give us our average. Let's just do the whole thing. Average daily credit sales. Put that in the outer column. That's going to be the 1,000,004 divided by the 360. And then we have the average. Well, let's do this. This is over here. The average collection period then is going to be, we already are given that, the 55. So then we can underline here, home tab font group and underline. So there's the numerator, there's the denominator. To get to the accounts receivable, we'd multiply this out then. This number times this number, and we could do our algebra, obviously, to back in to that number, which sometimes, to do the algebra, sometimes it's nice to know the formula to write it down this way, and then work your algebra with the one unknown. So to prove this, then we can say, all right, I want this number divided by this number, see if it still comes out to the 55. It does. I'm going to make this blue, home tab, font group. Let's make it blue. Let's put a border around it. Now, if you were to rework this, you can kind of figure the formula. If you look in a book problem or someone gave you, this one, they're gonna show you this calculation, but you might not need to remember that because this is the one you would typically do from the financial statements to the average collection period, and then you can back into the number. But if I was to just do a formula for finding the average collection receivable, meaning I'll just reverse the algebra here, it would look something like this. We would take the credit sales, which are going to be the 1,000,004. We're going to pick up the average or the days in year, which is going to be equal to 12 times 30, about 360. And then I'll divide that out. So once again, we did our calculation for the average daily sales. Average daily sales. And then we're going to be picking up the average collection period, which is given to us here in days. That's going to be equal to the 55, and that's going to give us the average accounts receivable, which is going to be equal to this number, the 3889 times the 55. Let's put some underlines here. Home tab, font group, underline here, home tab, font group, and underline. So you can see the relationship between those two calculations. Once again, useful when thinking about cash flow management, the relationship between accounts receivable and sales and credit sales. All right, so let's do a slightly different variant. So now we're thinking about the annual, we want to calculate what the annual credit sales are, and we're given the average collection period. So you can imagine doing this in practice. You could say, all right, I mean, usually I take the financial statements and I calculate what the average collection period is. But if I'm projecting out into the future, I might say, well, what if I can get my average collection period to be 50 days, collecting in like 50 days, and I know what my receivables are? Then I can try to back into and figure out what my credit, what the credit sales number would be. That would be the unknown for this type of calculation. So we know down here, we know the average collection period is our formula that we've been working with that is normal. That's the normal formula we would do if we were just analyzing the financial statements, taking data from the financial statements to get to this number. So we can use that number then to back into the annual credit sales. And then we'll make a formula based on annual credit sales. So in other words, if you look at a book problem, they'll give you a formula basically calculating annual credit sales, and you'll start to think that you need to calculate or memorize this formula, but probably not, because this is the one you're normally going to memorize. And if you know that it includes the calculation of the annual, the credit sales within it, then you can just memorize this formula, use your algebra. So this formula is average collection periods accounts receivable divided by the average daily sales. So we've seen this multiple times. Let's do this quickly and see where the unknown this time would be. We're going to say, all right, we've got the accounts receivable. I'll put that in the outer column. That's going to be the 90,000. And then we have the average daily sales. The average daily sales is going to be our next item. We're going to put a colon there. We're going to have the credit sales. So the credit sales. And then we have the days in year. Now the credit sales, that's going to be our unknown. That's what we don't know. So I'm going to say that's the unknown. And the days in the year, I'm going to say that's going to be 360. Well, it's 360, but let's say it's 12 times 30, which is 360. We'll underline that. And then we're going to say this is going to be the average daily sales, which would be in the outer column. And it would be this number, which we don't know, divided by the 360, which is going to be 0 until we plug that number in. And then we've got the average collection period. And we're given this number, that's going to be the 50. So then we can back into then the 0 here, and then use that to back into basically the credit sales. So we can see that 90,000 divided by something is going to be then the 50,000. So if I take the 90,000 divided by the 50, then we get the 1,008. So then I can say, all right, if I get the 1,008, let's double check that by saying if I take 90,000 divided by the 1,008, I get 50. Let's make that blue. I'm going to make that blue and put a, all right. And then I know that something divided by, something divided by 360 is going to be that 1,000,008. So let's say that we take the 360 times the 1,000,008, and we're going to get to the 648. All right. And so we can kind of back into that number. Now, if I was to do it just in this format, so if I was going to basically redo the algebra to put a formula to get to the annual credit sales, it would look something like this. We would say, all right, we first need the average daily sales, which is going to be the accounts receivable. Accounts receivable is going to be the 90,000. The average collection period is going to be equal to the 50. Let's put an underline here by going to the Home tab, Font Group, and Underline. And this is going to give us our average daily sales. And we'll put that on the outside. That's going to be the 90 divided by the 50. So we get our calculation here, the 1/8. And then we have the days in year. Then it's going to be equal to the 12 times 30, or whoop, something went wrong. I'm missing a 0. The 12 times 30. I think I said 12 times 3 last time. So that's Home tab, Font Group, and Underline. And then that's going to give us then our annual, whoa, what happened there? Annual credit sales, which is going to be equal to the 1,008 divided or times the 360. Let's do some formatting up top. I'm going to select these three, go to the Home tab, Alignment, increase the indenting here. Home tab, Alignment, increase the indenting there. So once again, you might think that you have to memorize this annual credit sales formula. Normally, in normal circumstances, right, you wouldn't be calculating the annual credit sales if you were analyzing financial statements, because it would be on the financial statements and you would be working out this number, right? So if they give you this number, the one that's not normally on the financial statements, and ask you to calculate something on the financial statements, or if you're doing projections into the future and you're working with something that's not on the financial statements, making an assumption about it, and want to then go to something in the financial statement, you may want to start with the calculation for that number that's not on the financial statement, the thing that you normally calculate from the financial statement, and then back into whatever the unknown is that you're looking for.